welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, it's the last day of trade for this week and very important day of trade as well, as in India, the 2024 Lok Sabha elections commence today. 102 seats across 21 states and union territories go to the polls, whereas across the globe, geopolitical tensions have taken center stage with Israel's attack on Iran, as per the news reports that we are getting. As for the Nifty, for the first time since March of 20th, we've actually seen the index close below 22,000 mark as of yesterday, and the Nifty is already down about 2% for this truncated week. Another weekday on Friday could actually make it the worst week in 6 months for the index. How should you then approach the markets? Well, we'll tell you over the next 90 minutes. Very good morning to all our viewers and good morning to you, Shail.
Good morning, ladies and gentlemen. It's a troublesome Friday that is there upon us. A lot of geopolitical events have resulted in the GIFT Nifty giving an indication of a 300-point drop as far as the main Nifty is concerned, which shut shop somewhere like 22,000 yesterday. So a 300-point drop because of Israel's attack on Iran's cities, some of them having nuclear establishments, has worried across the globe. You see Dow futures trading about 300 to 350 points lower. Across Asia, there is a sea of red, especially on the Nikkei, down about 800, 850 points. Parts of China, parts of Hong Kong are all trading in the red. And there is absolutely no doubt in our mind that we'll have a substantial gap down. Now, the only concern here is that does the selling continue after the gap down, or normally what happens is that once you have a gap down, the indices flatten out. Remember, we are also in the last week of April's expiry, which ends on the 25th of the month. And not only are there geopolitical tensions, the earnings from Infosys are not all that good. So all levels now make no sense. At the moment, there is a bear grip on the Lal Street. We will evaluate what happens during the day. As it is, there was a range expansion on the Nifty and the Bank Nifty yesterday. If you look at how the range expansion worked, it was about 365 points on the Nifty between the high and low, and about 850 points within the Bank Nifty. Again, as I say, no matter what anybody tells you at the moment, do not try to buy this falling knife. Once situation has stabilized in the Middle East or West Asia, only then does it make sense to put in fresh money. For the moment, we will wait for prices to stabilize. Already crude oil is up 4%, which is a pain point for India. At the moment, $90 a barrel. There will be more pain coming in as far as markets are concerned. Earnings have been disappointing as of yesterday as far as Infosys is concerned. Today, we have 12 major earnings, including HDFC Bank, Wipro, HDFC AMC, Hindustan Zinc and Jio Financials. As also, we will be dealing with the first phase of the elections, which we will discuss in great detail at the moment. So 21,700 on the Nifty looks as far as opening quotes are concerned. Beyond that, let us see how the market moves. My understanding is this pain is going to accelerate. I had yesterday pointed out that the angle of decline and the speed of decline is very fast, and that has now proved true. We'll have a lot of problems coming in as far as the markets are concerned. We will just wait for these problems to subside and then probably look at a good equity diversified fund to put in an extra SIP, or maybe start in some fresh investments. But at the moment, please avoid catching a falling knife. Sakshi.
Okay, so as far as the global cues are concerned, let's look at those as well. While all the three major US stock indices wavered throughout the session overnight, with weakness in the chip weighing sector The Nasdaq down the most. The S&P 500 also joined the Nasdaq in the red, slipping for the fifth straight session, although the Dow Jones managed to eke out just about some minor gains. Importantly, it's the futures that are trading further lower in trade. For Dow Jones futures, it's a percent lower, loss of 365 odd points as of now, and all those three indices are trading lower in the futures market. Asian markets are feeling even deeper heat if you look at tracking the Wall Street losses, and of course the early morning tensions as far as global markets geopolitical concerns are there. Nikkei is the one that's down by about 3.3% now. That's a loss of over 1,200 points. Kospi is down by 3%. Hang Seng is down by 1.5%, and minor losses for Shanghai as well. Now, when we talk about the GIFT Nifty, that's indicating a lower start for the Nifty today, with about 306 point of a cut at 21,748 as of now. This is a sharp lower tick with which the Nifty could be opening with in today's trading session. As far as the flows are concerned, the FIS net sold shares worth about 4,260 crores in yesterday's trading session. They remained sellers for the fourth consecutive session. They've also sold stocks worth nearly 20,000 crores in the last 4 days. Domestic institutional investors, however, bought shares worth about 2,285 odd crore rupees in yesterday's trading action. As far as the stocks are concerned, of course, Infosys is the first one that we will be tracking. The company reported its earnings after the market hours yesterday. It's missed its FY24 revenue growth guidance with just about 1.4% growth, whereas their own guidance, which was up to just about 3 months back, has come in was about 1.5 to 2%. So they've missed this guidance. FY25 guidance is also muted at 1 to 3%. And the company has also missed estimates on US dollar revenue growth, on margin, as well as on the profitability front as well. Even though the profits optically look a beat, but that is due to another income component as well. The company has, however, also declared a total dividend of 28 rupees per share. Bajaj Auto, that's the one that's in focus. The company reported good set of numbers yesterday after the market hours. So revenue grew by 29%, profit was up 35% at 1936 crores. EBITDA and margins also came in higher than estimates, and the company has declared a dividend of 80 rupees per share. Let's now talk Gokul Das Exports. The company has launched QIP to raise funds. The floor price is at 789.9, which is a 3% discount to yesterday's closing price. Mahindra Life Spaces, it sold homes worth 350 crores in just 2 days at Mahindra Zen in Bengaluru, which is the city's first net zero waste energy home. ICICI Securities, again the earnings came about, strong earnings, net profit at 536 crores from 262 crores last year. So revenue is also up 74% odd, EBITDA up 96% as well, as margins at now 69.9%. So we'll keep an eye out on this too. RVNL, the company has signed an MOU with Turkish Engineering Consulting and Contracting Tumas India for partnership and collaboration for public transportation and infrastructure projects in India. So those are some of the stocks that I'm keeping an eye out on. Shell.
Ladies and gentlemen, the dance of democracy begins as far as the Indian elections are concerned. Remember, 102 seats go for votes today in 21 states. Somewhere like 8 union ministers and 2 former chief ministers are in the fray to get your vote. Let's join Mr. Piyush Mishra. He's joining us from Nagaur, Rajasthan, to understand what it means for the Indian democracy today. Piyush, a very warm welcome to you. How do you see these elections? The largest phase opens today. We'll try and find out whether he's able to hear our voice or not. Piyush, can you hear me? We'll just get Piyush again. I think the PCR is trying to say something. PCR is is Piyush with us? चलिए what we'll do
I
is
can
we'll
hear
try
you,
to read.
but
Okay.
no, I'm not saying I'm not
Piyush is.
reading the question of answer.
Yeah. Piyush, what does the election hold for today? I think what we'll do is we'll try to establish contact with Piyush and then get back to him. But for the moment, the opening quotes on the Nifty, GIFT Nifty, as well as the weakness that is creeping all across Asia, is creating a lot of mayhem as far as Indian markets are concerned. And we'll be looking for a very serious gap down, somewhere like 21,650, 21,700. That essentially means that the 100-day EMA will be taken out. My focus will be not on looking to buy this dip, but waiting for the markets to stabilize. I think a couple of stocks that deserve mention at this point of time are two. Infosys, post its earnings, has had a downgrade from two major brokerages. One is JP Morgan, which has cut the price target to 1700, and CLSA, which has reduced its expectations from Infosys to 1553, as also Bajaj Auto. A stunning set of numbers that has come in from the auto two-wheeler maker. Very strong set of profit after tax, which rose to 1936 crores, revenue which rose to 11,485 crores, and an expansion in margin to 20.1%, and of course a dividend payout of 80 rupees per share. Remember, Bajaj Auto is the best performing auto stock on the F&O space over the last 1 year, up almost 100%. Sakshi, are we able to get in touch with Mr. Piyush Mishra?
Us. Meanwhile, let me just reiterate some of the brokerage houses reports that we've got. Of course, Infosys is the first one that all the brokerages are keeping on their radar. The lowest target has been declared by Nomura in their report, which has a neutral rating on Infosys with a target price of 1400. They do believe that weaker than expected guidance for FY25 is something that they are disappointed with. Also, there are no signs of discretionary demand revival, and therefore they've also lowered their FY25, FY26 estimated EPS by 2 to 3% odd right there. So that's as far as Infosys is concerned. Brokerage houses, showing, and cutting the target prices on Infosys. For Bajaj Auto, the target prices have been raised, especially the most bullish report that we've got out of Citi, CLSA, and Bernstein. It's Bernstein which has given an overweight rating with a target price of 10,300 on the stock, which they do believe that the company has been able to give a result which is beat on all fronts, with margins and volume strength emerging as the key drivers for the company. They also believe that management has remained bullish on the outlook for domestic business and on the electric vehicles as well. The only sell report that we have is from Citi, where they have, however, raised the target price to 6,500, and they do believe fourth quarter was ahead of estimates, driven by better than expected realizations, and the focus is on gaining the market share in the 125cc plus bikes, added by the new model launches as well. So those are some of the important brokerage reports as far as Bajaj Auto is concerned. Apart from this, HDFC Life is another one which is on the radar of brokerage houses. HSBC has given a buy rating but cut the target price to 750 rupees. Jefferies also has cut the target price to 750 from 800 rupees earlier, and Nomura has a buy rating, but the target price here has been slashed to 680. Now, they do believe that for HDFC Life, there was an inline growth, the margins were a tad weak, and growth versus margin trade-off has intensified. For FY25, Nomura believes that management has guided for an APE growth to come in at least in line with the private peers at about 12 to 15%. So they'll keep an eye out on this one as well. So those are the three key brokerage companies which are on brokerage houses' radar today, Shail.
Piyush Mishra has joined us from Rajasthan. Piyush, how does the first phase of elections look to you today?
Well, certainly the first phase of 2024 Lok Sabha elections has now begun. The people have now started queuing up right outside the voting centers and are exercising their franchisee. Remember that around 102 seats are going to poll in 21 states and union territories across the country. Right now, I'm present at Nagaur, which is the most politically active constituency. Two big names, Hanuman Beliwal and Jyoti Mirza, are contesting from here. Jyoti Mirza is BJP's candidate. Hanuman Beliwal is India's candidate, India Alliance candidate, and both are making tall promises to the people of Nagaur, to the people of Rajasthan. It remains to be seen on whose promises the people are going to vote for, and what are the issues on which they will be looking forward to be fulfilled in if either of them gets elected for the Lok Sabha. Today it's going to be very hectic day, entire day. We can expect the voting to continue. In Rajasthan, around 12 seats, beg your pardon, out of 25 seats are going to poll. As far as Uttar Pradesh is concerned, 8 seats are going to poll. In West Bengal, Madhya Pradesh, in different parts of the country, the voting right now, as we are speaking, is underway. We'll have to wait and watch how the people are going to queue up further as the time passes, and how many people are there, lining up to exercise their franchisee. As we are speaking, people have started queuing up, and they are talking about the issues on which they are coming here and casting their vote.
What about the early trends as far as voters, are there? Because, we usually see that it's the second half where most of the voters do step out to cast their votes. Is the trend going to be different this time? Prime Minister Modi has urged everyone to cast their vote today. What is this trend that you're looking at around you?
Well, certainly we can expect a huge number of people to come out and cast their vote. Remember that not only Prime Minister but top leaders of different political parties have requested people to come and cast their vote in large numbers. If you talk specifically about early trends, since 7 a.m. in the morning, we saw people queuing up in large numbers and casting their vote. There are many issues on which they are here. The issues like women's security, the issues like law and order, many of them are the one which they are keeping in their mind before casting their vote. Remember that before the campaigning for first phase came to an end, we also saw many promises were made by various political parties. PM Narendra Modi is requesting people to come out in large number and vote so that the NDA can get more than 400 seats in its kitty. If you talk specifically about the India Alliance, it is talking to people on the issues of corruption, joblessness, social security. These are the issues on which the India Alliance is asking people to come out and cast their vote. It remains to be seen how the people are going to trust and vote on the promises being made by the various candidates from both these sides. Today, people are coming out to cast their vote for 102 Lok Sabha constituencies spread across 21 states and union territories of the country. Multiple parties are in fray. I am in Rajasthan, where 12 seats out of 25 seats are going to poll. Before that, we had seen hectic parleys, hectic campaigning taking place. Various candidates have been fielded from various seats in the state of Rajasthan. The second phase of Rajasthan will take place on 26th of April, and on that particular day, we can expect all the seats to be completed in two phases. The elections for Rajasthan are taking place. If you talk about Rajasthan, last time in 2019, BJP was able to win 25 out of 25 seats,
Right.
and BJP is expecting to repeat its performance which it had in 2019.
Right. Thanks a lot, Piyush, for being with us and sharing all those insights. And we will continue to touch base with you throughout the day as well. Meanwhile, let's welcome our guest on the show. Mayuresh Joshi now joins in. The head of equity research at William O'Neill India is with us. Very good morning to you, Mayuresh. A very, very tough sort of a day. We are looking at excitement in the domestic markets with respect to elections taking center stage, but globally, the war situation and the geopolitical situation is only escalating. How would you really look at the markets now? GIFT Nifty is already indicating a 300-point cut.
Morning, Sakshi. Morning, Shail sir. I think two things. One, we were very, very cautious over the last few weeks in terms of the developments happening on the geopolitical front. Obviously, as far as the domestic macros and micros are concerned, there is no two ways about it. I think India is placed head above in terms of where the other developed and the developing markets and the emerging markets are, both in terms of where our fiscal numbers are, current deficit numbers, current account deficit numbers are, and even how earnings have started off and played so far. So expectations in terms of a double-digit earnings growth is something that the markets is penciling in, and therefore the kind of premium valuations that India is getting. But geopolitics and the second aspect in terms of how data points are playing out in the US itself. We started off at the beginning of the year with the expectation of 4 rate cuts. That has come to 2. Now, if the data points probably remain sticky as far as core inflation is concerned and do not show any significant signs of improvement, that 2 might just precipitate and come down to 1 or even 0 for this year. So I think it's a very tough situation outside India as we speak, both in terms of geopolitics as well as how the economic data points are playing out. So I think it's tough for the markets. I think the indications are very, very clear. We have downgraded the markets to an uptrend under pressure. We remain extremely cautious at this juncture. Let's see how the next few days play out.
Okay, Mayuresh, a very warm good morning to you, and good to see you clean shaved. I think after 2.5 years, that's a nice look that we have from Mayuresh on market today. Crude oil now up 4%. Mayuresh, this is the largest import item that India's balance sheet has, and given the elevated scenarios and the pain in the pipeline, how do you see that impacting not only India's balance sheet, the overall market as well?
Morning, Shail, sir. Yeah, I think after a long time. So the aspect in terms of crude and the dynamics in terms of our current account and trade deficit, I think it does play an important part, because if crude spikes significantly higher, I think what really takes place is that the inflationary aspect, because we import crude to a large extent, and though we had the optionality in terms of Russian crude, which was at a discount, that optionality still stays on the table. So to a certain extent, I think the basket of crude buying will be relatively lower, in my opinion, compared to where the market price of crude will be at this juncture. However, it does create an impact in terms of the outflow that it might have if crude sustains above these levels for a very long period of time. And obviously, that has a multi-leg effect in terms of a lot of aspects as crude prices go higher. Though it's an election periodicity at this point of time, at some point, if they stay higher for longer, the aspects in terms of higher crude prices will play out in terms of higher logistics costs, will gets played out in terms of all different commodities, which probably either transport commodities and consume the end product as well. So yeah, I think it might just fuel inflation if this lingers on the higher side as well. So that's again something of an upside risk for not just our markets, global markets as well.
Okay, ladies and gentlemen, what we'll do is we'll take a very quick look at what the GIFT Nifty is telling us. At the moment, of course, there is major pain in the offing. It's still down 250 points, but remember, it was down almost 320 points earlier. The low was 21,660. At the moment, it's 21,820. So while there is pain, it seems that the quality and the quantity of pain is getting reduced. The other commodity that's flaring up, Mayuresh, because of this crisis is gold, almost $2,400 an ounce. How do you see that playing out in Indian markets? Anything that catches your fancy on the side of gold?
I think the obvious trade-off was gold prices, which had seen a huge spike, Shail sir, and the expectation again is that if this continues, it becomes a perfect hedge in terms of the global volatility that we've seen. Obviously, it is at an all-time high as we speak at this juncture, and I've read through multiple reports which are indicating even higher prices for gold, with the assumptions in terms of how bond yields are moving in the US, considering the sticky data points as I just mentioned, and what probably happens in terms of the Middle Eastern tensions, the Russia-Ukraine crisis as well. So to that aspect, I think gold might still keep on moving higher. And you've seen fabulous numbers being reported by gold companies as well. You pick out any gold company on the exchange, Kalyan Jewelers, you pick out Senco, they have reported a very stable set of numbers. Even gold financiers to a certain extent, to the likes of Mannapura, Muthoot as an example as well. Because automatically, I think what has happened is because prices have moved significantly, the LTVs which they had given out earlier in terms of gold advances, that gap has now widened even more. So I think there is even every scope that if people come out, the existing borrowers itself, and want to borrow more, they have that space with them in terms of maintaining that balance very, very comfortably, maintaining their spreads and NIMs as well. So yeah, I think there is a kind of momentum trade that happens with gold and gold ancillary companies. And the moment of gold, as I've read through reports, that might continue because of all these macro concerns playing.
Right, sir. We look at the pre-open prices, ladies and gentlemen. Infosys first. It was down 10% on opening quotes. It's now down just 4.5%. 1365 for you. There isn't much panic in the market. I'm surprised myself as to why do we have just a 60-point downtick. Nevertheless, it is something good. Let's pay attention to what prices are at the moment. Infosys now down 3.5% at 1366. In sympathy, TCS is down 1%, 3800. I'd just like to see what is happening on Reliance. Reliance is flat at 29.27, and HDFC Bank, ladies and gentlemen, is about 1.9% higher at 15.20. So HDFC Bank is being used by sensible people to offset the massive impact, negative impact of Infosys, as also geopolitical concerns. Some sanity coming back into the Nifty, now down 128 points, 21,862. This will only accelerate down. Let's look at the top gainers. I just want to see what Bajaj Auto is doing at this point of time. As far as prices are concerned, Bajaj Auto is up 0.5%, 9,092. Remember, the earnings were fabulous as far as prices were concerned on Bajaj Auto. Let's look at how prices are moving in the F&O space. Well, there is a sea of negativity. Power Finance Corporation is opening 3.5% lower, 380.55. Kotak Bank is down 3%. ICICI Pru is down 3.5%. We have a cut on the Infosys now, down 4%, 1365. Let's take a detour to F&O as far as the larger prices are concerned. ONGC should be watched. A rise in crude oil prices is beneficial. 2% higher, 280. Apollo Hospitals is trying to open 5% higher. Very quickly, we'll take a detour to NSE 500. Remember, these are early prices and there is intense volatility in the market. Let's look at ICI Securities. Good set of numbers, 2% higher, 718.50. I don't see much happening here, ladies and gentlemen. I'll just mark a couple of prices on NSE 500 as well. The losses on the Nifty are now accelerating. 21,850 for you, 150 points lower. This is more or less in sync with what the GIFT Nifty was talking about. And let us see how pre-open settle. But nothing much as far as prices are concerned. Schneider, there has been a very, very sharp downgrade by Goldman Sachs on this particular company, opening 5% lower at 718.40. Remember, this is the circuit. The fall on the Nifty is accelerating, 165 points lower, 21,833. To you, Mayuresh, from the likes of it, it is not such a bad opening, given the fact that there is pain across the US futures market and Asia is pretty much trashed.
Yeah, I think it's a reasonable opening, Shell sir, to a large extent. And I think the maturity that Indian retail investors have exhibited over the past few weeks, I think this is going to be the real test now in the next few weeks. As volatility creeps in for geopolitics, as volatility creeps in for uncertainty in terms of data points, rate cuts, will the retail investors stick out to their conviction of holding out to the Indian equity markets? I think that's the litmus test. But my belief is that the Indian retail investor has become much smarter, has understood the dynamics in terms of how long-term investing can compound your wealth. And therefore, I think the kind of SIP flows that can continue in the Indian equity markets will still keep on continuing, in my opinion. And that creates a huge, huge base effect. With a SIP book at around 21,000 odd crores, so the expectation of that SIP book going to around 26,000 odd crores, even if FPIs probably move out at this juncture for bond yields moving up, US bond yields have touched 5% and all the factors and plays at hand. I think at some point of time they will be forced to come back in terms of the sheer growth that the Indian economy will exhibit. So I think it's a very reasonable opening in my opinion. And even if there is a sharp cut going forward, because I think a lot of algos will start playing out as the market opens, at least for the first half an hour of market opening. Once all that probably plays out in the first 45 odd minutes, 1 hour, I think whatever cut probably comes through, I think let's see how stability probably comes through and what probable escalations happen in the next few days. So I think not seeing such huge structural downside for the Indian markets, fingers crossed, but let's see how the next few days play out.
Okay.
Okay, it's a 100-point cut, ladies and gentlemen, on the Nifty. We have four stocks within the top index heavyweights which are in the green. Let me elaborate. Hindustan Unilever 1.3% higher, 2245. ICICI Bank about a percent higher, 1064. And we have Reliance almost flat, 2928. HDFC Bank now down 7 rupees 1487. To the best of my understanding, this is one of the most sensible pre-opens that I have seen, given the carnage that we have all around. Sakshi, I believe Osho has joined us.
Yes, absolutely. Osho Christian, Senior Research Analyst, Technical and Derivatives at Angel One, joins in. Osho, good morning to you. Good to have you with us. Some sanity coming back into the markets. There are some reports that are indicating that Iran officials have come out and said that there has been no missile attack and they have managed to prevent any kind of drone attacks as of now. Perhaps that's the reason why some kind of a recovery has come in, but we will wait for official comments. These are just reports that I'm getting from various sources that I'm getting, which are unconfirmed reports as of now. But Osho, how are you really looking at the markets today, and what would you really do on a day like today?
Very good morning, everyone. Well, looking at the recent development that we have seen already, our market has cracked below the zone of 22,000 mark. So technically, our market had the undertone has turned around on the bearish mode, but over 800, which is the previous swing closer, should be acting as a very strong support for the timing. So I'm expecting that market should sustain around the zone of 21,800, and if it sustains, then from here onwards, if geopolitical thing is on a relief front and the global developments are on a very decent pace, then from here onwards we can see some. It was only because we are having a kind of a dip in the market only because of the political tension. So undertone for our domain, we are agreeing well for the bulls only if the global markets tend to.
Okay, I think there is some kind of a network issue, Osho. We aren't able to hear you very clearly. We'll sort that out. But Mayurish, to you, on Infosys, the kind of earnings that have come about, how would you really look at the company, the stock now? Of course, disappointing FY24 growth as far as revenues is concerned. It's missed the guidance. FY25, it's a very muted guidance of 1 to 3 odd%. How would you look at Infosys now?
No, I think so. We stayed away from the stock, and there were large parts of the arguments that there will be a back-ended recovery, but I think that has not played out at all. And the guidance itself is a tad bit disappointing. I think the street was expecting some element in terms of uptick as far as constant currency revenue guidance is concerned for FY25, along with some uptick in terms of the margin band as well, 20.5 to 22.5. But that has not probably played out. So if you go by what Accenture had to say, and again, I think the kind of recovery that one expects in the US markets, with rate cuts again getting delayed to the second half of the calendar year. A broad part of the expectations in terms of a very strong recovery in BFSI, retail, manufacturing might be back-ended. Again, the concerns actually for top-tier companies is the billion-dollar order wins that they've got. And yes, I think it's been a good quarter as well on that. TCS 13.2 odd billion, Infosys has done 4.5 odd billion. That's the silver line in terms of what has happened. But will this continue in the next few quarters, which will be a little bit more sticky as we enter into the next phase of how the US economy is probably shaping up? And what happens probably to margins, which remain at an elevated level, though normalized at this juncture, might pull down earnings a tad bit. So my own sense is that there will be a second half recovery. But I think the the stocks will go through a good period of time and price consolidation as well. So I think let's wait out for the top tier names. We continue holding on a couple of names in the mid cap IT space, stocks like Persistent in our global portfolios.
Okay, I think Osho is back with us. Osho, what will be the two top stocks that you will be sharing for today?
See, even in this current bearish market, I am having quite a bullish recommendations. First one, I am witnessing a very strong breakout in Bharti Airtel. So Bharti Airtel can see a very strong follow-up buying in the near period, but I will wait for the levels to cool off and wait for first half an hour that where the levels actually settles down. But Bharti Airtel is looking very positive. So any kind of dip towards the zone of 1260, 1250 should be acting as a very strong support zone, and one should definitely try to as a support zone. So that should be traders should keep the 1210 as their stop losses, and on the higher end 1300 should be the target that one can expect for short term. The other counter which is looking very positive to me is MCX. MCX again have seen a very decent run in the last two trading sessions. So I'm expecting that there can be some strong development that can be seen in MCX in the coming period. So MCX is a buy recommendation around 3850, 3860 kind of a levels. 3720 should be kept as the stop loss, and on the higher end I'm expecting a target of 4050.
Okay, let's get Mayuresh into the conversation and get his views on Bajaj Auto. Another blowout quarter from this two-wheeler maker, Mayuresh, the best performing auto stock over the last 1 year in the F&O space, as also on the Nifty. How do you see these earnings? Where do you think is the trajectory headed for Bajaj Auto?
So very strong set of numbers. And again, I think if you probably look at how the entire product mix has performed, domestic two-wheelers have done exceedingly well. You've probably seen the domestic two-wheeler exports also catching up quite significantly. The new launches that has happened under Triumph and the supply thereof, I think there is a good element in terms of how those numbers will stack up in the coming year as well, along with their two-wheeler electric portfolio under Chetak. So I think that is ramping up quite well in terms of the distribution network, so on and so forth. The three-wheeler exports and two-wheeler exports, which are a little bit sticky, I think that has come back very, very strongly. And therefore, I think the margin performance that Bajaj Auto has exhibited, about 20 odd percent for this quarter, is exceptionally good. Now, the management believes that they will be able to maintain margins going forward as well, maintain their leadership specifically in the 125cc category through the new variants of Pulsar that they've probably launched. With the kind of cash that they have on their books, I think that also becomes a very, very encouraging sign. And therefore, I think the kind of numbers that they have posted, the belief is that FY25, with all these factors coming into account, expectations of more launches, specifically in the category of 200 to 400, which is missing a lot of good products, along with Chetak picking up and the three-wheeler market picking up in terms of exports. I think all that should hold up. Now, the only issue here, Chelsea, is that valuations have gone through the roof for a stock like Bajaj Auto. It's trading significantly higher as far as our base count is concerned. Therefore, I think any investor who probably holds on can hold on. I think fresh investors will need a pullback on this one.
Absolutely. Buland Bharat ki Buland Tasveer, I am sure kids who grew up in the 1980s, it does not include Sakshi, Mayuresh and Osho, will remember that wonderful ad that remains embedded, at least in my mind. Yes, valuations have gone through the roof, but 5 digits are coming, and let's see how that pans out. Mayuresh, against the backdrop of what is happening in the Middle East and West Asia, your view on defense stocks, Indian defense stocks?
So exceptionally well. I think what has transpired, Shelson, and we were just doing these stats a couple of days back. The defense outlay has been significantly higher as far as the budget is concerned, close to double odd digits. And therefore, the kind of order wins that all defense companies are getting over the last few years have been exceptional. So the order books have been stacked up. That gives them revenue visibility, not just for the next few quarters, for the next few years as well. Again, the orders and the margins at which these orders are coming through are extremely good. So as execution is happening at a decent pace, because they have been given strict timelines to complete these orders, the kind of operating leverage that gets played out on their books is good. So yeah, the story continues.
Okay, ladies and gentlemen, we have the first prices. It's a fairly muted downtick, 160 points lower on the index, 21,830. There is unbelievable amount of short covering happening right there on the screens. 400 points lower on the Nifty Bank, 46,620. The IT index is down a percent, 33,174. The NSE 500 down 200 points at 21,136. Infosys first, not as bad as it was thought about. 20 rupees lower, 1399. How about Reliance? 16 rupees lower, 2912. How about HDFC Bank? 1483, 11 rupees lower. All 10 indices, all 10 index heavyweights are in the red, ladies and gentlemen. Is the pace accelerating? Yes, so it seems. 183 points lower, 190 points lower on the index. 21,800 is the new battleground between bulls and bears. Let's see what is else sticking. ICICI Bank down 3.5 rupees, Axis Bank down 22 rupees, State Bank of India down 10 rupees. And what about L&T? L&T at the moment is down 55 rupees, 34.96. I just want to see what defense stocks are doing. This will give you a key as to what the moves are in the market. Cochin Shipyard 1.3% higher, 1092. Garden Reach Shipbuilders in the green, 867. Bharat Dynamics is something that needs to be looked at, 1812. BEL in the red, HAL in the red. How about the PSU basket? I want to see what ONGC is doing, 1.8% higher, 279. A very quick look at what's happening in the NSE 500 space. Most active counters have Infosys, no worries there. It's a very muted fall, 2%, 1390. Reliance is a third of a percent lower. HDFC Bank is 0.5% lower. Jio Finance is 1% lower. Bharti Airtel is third of a percent lower. Bajaj Auto 2% lower, 8827. Osho, coming to you. Anything that catches your fancy? To my mind, this is a very, very muted reaction to the pain that is there globally. Mayuresh, the question is to you. Anything that catches your attention in the opening trades?
No, absolutely. I think what we've kept on our radar, as I said, is a few stocks out of the pharma space. So that should be kept on your watch list. Example being, say, Strides Pharma. Again, I think the kind of numbers that they have posted so far, the expectation largely is that FY25, as per the management take, can be significantly better than what they've posted in FY24. You'd seen a huge recovery in the last quarter, where gross margins had come to 60%, EBITDA margin in excess of 18%. They're expecting a 15-20% revenue growth. They're expecting EBITDA to grow in excess of 30-odd%. They're expecting cost optimization, where the overall costs are around $230-240 million to come down to $200-odd million, effectively reducing their net debt to EBITDA from 3 times to 2 times in the next 12 months itself, automatically creating a huge impact as far as return ratios are concerned. They've got a huge and a good product mix as far as CDMOs, soft gelatin capsules are concerned. And therefore, the space that they are in, the expectations in terms of more launches coming through, and these numbers playing out over the next 12 months can probably imply that earnings grow at a very, very decent pace. So I think we are getting a little bit more selective in terms of pharma and building our watch list. Strides Pharma is one example, Star. The other one is Natco Pharma, which we have discussed a couple of weeks back on your show as well, where our belief is that the complex generics business will continue doing well. They are expecting to have a few key launches over the next few quarters. And the management hope is very, very hopeful in terms of the US formulations contributing significantly both from a value as well as a margin perspective in terms of exclusivity, in terms of a few of these key complex generics that they will probably launch. 38-40% EBITDA margins means that margins should remain at those elevated levels as we head into these product launches in the next few quarters as well. So I think Natco Pharma, Star, Strides Pharma is something that we are keeping on our watch.
Absolutely. Mayuresh, I've always believed that a good cup of tea can solve a lot of problems, and I put in a lot of sugar in it in the initial pre-market opening. That seems to have worked. It's a very matured reaction to what is a very painful pain point as far as geopolitics is concerned. We are down just 184 points. 21,800, ladies and gentlemen, has held. Remember, this is also the 89-day exponential moving average. Let's hope this pain point is getting solved. Fresh pain is coming into the IT index, now 521 points lower, 32,970. Sakshi, what have you seen?
Nestle Shell 1.5% lower in trade again today. I wanted to take Mayuresh's view on that one. I remember, Mayuresh, we had discussed this, on just ahead of the stock split. When this happened for the first time, and that video of yours really got viral on our channel when you were talking about Nestle. Now fresh concerns emerging after the ghosts of the past have been buried. How would you really look at Nestle at this level?
Not so good. So I think it's all fine that Shell sir put sugar in his cup, but it's not good that the sugar comes in infant and baby products. So they just got over one crisis, and this other one has probably loomed over. I think it's not a good sign. I've been reading multiple reports that if this would have happened in any developed nation, they would have got sued to a significant extent, which would have created an impact on their balance sheet. So I think all these issues cropping up time and again across their product lines is not a good sign. Let's wait and watch on what the management has to say on this, Sakshi. But again, I think it's not something that is expected to be taken well, at least from an ethical standpoint. So yeah, I think the management has to give a very good clarification on why it's.
Okay, fresh pain emerging, and the Nifty has slipped below 21,800 as of now, and across the board a whole host of heavyweights are trading with declines as of now. But you did mention about Nestle. I wanted to also take a wider view on FMCG, which has been a rather underperforming space, but now that we are looking at an above normal rainfall as per indications from the IMD, and rural recovery hopes also coming back into the fore, is this a space that you will be watching out for positively?
Second half, yes, but I think the next couple of quarters will still be painful, and that has come through in terms of business updates, actually, from a lot of FMCG companies. You're still seeing stickiness in terms of volumes not catching up significantly. Again, I think when you look at the rural-urban mix for FMCG companies, as far as demand is concerned, rural accounts for almost 60 odd percent in terms of their overall offtake. And a lot of these FMCG companies have done a direct retail distribution reach, which is a good sign. They've introduced a lot of SKUs, which is adhering to the rural market in terms of price points, which is a good sign as well. But because of deficient rainfall, because of discretionary incomes going down for a large part of the rural market, the volume degrowth has been very, very obvious for a lot of FMCG companies at this juncture. So this quarter, next quarter will be sticky for these companies. Good monsoons, fingers crossed. I think that is what I'm reading through as well. As that happens, and as those discretionary spending patterns start coming back in the second half, my own sense is that earnings recovery will only start happening back-ended from the second half of this financial year, which means that the next couple of quarters for a whole host of FMCG companies, Sakshi, there will be a good time and price consolidation as that happens. Valuations are not cheap for any stock under consideration that we're probably speaking about. And therefore, I think this space might just underperform over the next couple of quarters.
Okay, might underperform for next couple of quarters, even going forward from here. So there could be some more pain coming in. I think Osho is back with us. Osho, anything that you have caught in the opening levels that you would like to highlight?
Yes, there are few counters which are looking positive to me by the gap down opening. First one is Petronet LNG. Petronet LNG is somewhere having a very positive momentum, but from yesterday there has been some kind of correction that has been seen in Petronet. But I was expecting that around 290 to 285 should be the range where one should try to accumulate the zone, accumulate the stock. And as of now, there has been some kind of dip that we have witnessed in the initial hours. So this counter looks good for intraday perspective. On the higher end, I am expecting a target of 308, and for positional, I am still having a biasness that it should consolidate near the zone of 290 for a further time wise phase, and post that it can see a next leg of rally in the coming period.
Okay, ladies and gentlemen, let's get back to the market. As I had said, it's the cup of tea laced with a lot of sugar that always works wonders. I'm sure Mayuresh does not agree with me, but like I said, अलग अलग चीज़ों का इस्तेमाल करना पड़ता है अलग अलग समय. और चाय की चुस्की के बाद मैं आपको एक कमाल की बात बताता हूँ. Day's low is 21,780 on the markets as far as the first 5-7 minutes of trade are concerned. The index is already up 70 points from that low. So the first bout of short covering, those people who had carried their shorts over the weekend are now booking. And as I have repeatedly said, this is a very mature reaction by the Indian markets to the pain that is probably going to accelerate over the weekend. It's a whole host of stocks, ladies and gentlemen, which are now showing moving with their day's high. So let me just mark a few for you and then get Osho into the conversation. The day's low, as far as Adani Ports is concerned, is 1270. The counter is now at 1295, still in the red. Let me just mark the major stocks. Infosys day's low was 1382. The counter is at 1397. How about Reliance? Day's low on Reliance was 2902. The counter is at 2910. How about HDFC Bank? 1496 for you. It has recovered from the day's low of 1482. So this is short covering coupled with buying at lower levels, which seems to have stabilized the market. For the moment, 21,800 is back with the bulls. Let us see what Osho's view is and anything that catches his fancy in the first 10 odd minutes of trade. Osho, to you.
See, overall, as I was mentioning at the very start, that 21,800 being a very swing closer, it should be acted as a very strong support zone, and from there onwards, we are witnessing some kind of a strong rebound in our market. So there can be some kind of uh, in between, there can be some kind of in between uh, fall in the market, but overall, I am expecting that from here onwards, we can have a very decent phase in the on the higher run, but again 22,000 now should be acting as the resistance zone. So one should have the focus on the stock specific front. On the stock specific, Bharti Airtel, which has given a breakout yesterday session and is currently trading around the zone of 1250 odd level. So I'm expecting that from here onwards there can be 1240 should be the zone where one should try to accumulate Bharti Airtel.
Okay, ladies and gentlemen, let's get more voices from the market as to how they perceive this market open and this situation geopolitically. A very well-known market expert, Mr. Arun Kejriwal, joins us. Arunji, namaskar. What a pleasure to be back in touch with you. How do you see this market opening and where do you think Indian stocks are headed?
It has come as a shock, and partly you could say something was expected. It has happened, but geopolitical tensions are something which cannot be anticipated, expected, and you can't build around an event like this. So technically we were all saying 21,900 is solid support for the market. That has been broken today and broken quite easily. Now, whether we are able to bounce back from there or not, the fact remains that one support which has held the market in good stead has been broken. The bulls and investors would be wary of what happens. But if you look at it in a larger picture, last 5 months when this rally started in the fourth week of November, we have come a long way. We've gained about 13-14% on the benchmark indices, and then there has been a meaningful correction, probably for the first time. So while this is most unfortunate what has happened, technically call it by whatever name, there is been a sharp correction, and there would be a opportunity for investors with a medium to long term to relook at balancing their portfolios and drawing up one where they could sort of weed out what is not good and buy what is good.
Okay. Arunji, how are you positioning yourself in your own personal portfolio? Is this a zone where you would put in some fresh money in terms of percentage, how much? Or are you still waiting for lower levels to come in as the main benchmark Nifty is concerned?
Shall to put it very, very bluntly, nobody can pinpoint a bottom. So I'm not waiting for a bottom. I have a portfolio of stocks already, and I am looking at some of these stocks to add and some others which I would like to buy fresh. You don't buy everything at one shot, but yes, you use an opportunity like this to buy maybe say 5-10% of what you want to buy. And you do selective SIP buying in the stocks which you are looking at. Let's understand, one needs to be very, very clear that from a trading perspective, you can get caught on the wrong foot, because I'm not trying to plant news into you, but what happens if, say, 1 hour or 2 hours later, you hear that there has been an explosion at some place? Markets will not take it kindly. So you will get such pressure points and such news flow, and it's quite easy to happen multiple times during the day. So people will be on tenterhooks, and you can use such opportunities to do very selective buying. Be greedy. Don't buy everything just because it looks attractive.
Mr. Kejriwal, very good morning to you, Sakshi this side. I wanted to understand from you, what are the kind of stocks that you would look to buy in this kind of dip? Which are the sectors that you would be looking at buying it from? If you could give some of indication for our viewers to really look at the right direction in these kind of dips.
So, Sakshi, three things. One, for a person to decide in such a situation what sectors and what stocks he needs to be looking into or buying is a little tough call to make. As far as I'm concerned, or the way I would look at it is, I have identified stocks, say, over the last couple of months, and it is these same stocks that I would look to buy. If you ask me, where are the opportunities, for example, housing finance, it is something which India needs. Affordable housing, housing finance. So look for companies in this sector. Yes, what is happening in the Middle East is not the best of things, but it doesn't mean that people will stop buying houses in India. So this is one sector that I like. I believe some of the small finance banks, banking sector, look very, very attractive. If you look, some of the new hotel companies which have come, they look good. We also have a lot of emphasis which has been laid by the government over the last 10 years on infrastructure, on water. I believe there are companies from this space which can be looked at even now. They don't get affected by geopolitical tensions, but yes, they have also corrected. So this is just to give you a flavor of what you can look for. There is opportunity available. It's not that doors are closed.
Okay. Mr. Kejriwal, what about the big heavyweight sectors like banks, for example? We started off this year with the hope that banks are going to be taking the lead, especially the private sector. That hasn't happened in the 4 months that we have seen thus far in this year. IT has been disappointing, and the earnings from Infosys even disappoint further. How would you really look at these two sectors?
Ma'am, within banking, you have to look for value. So if we divide the banking into three broad categories, A, private banks, B, PSU banks, and three mid-sized banks, I believe there is money, if any, currently in the mid-sized banks. The private banks are far ahead of the rest of the pack. PSU banks have run up in that market fervor led by retail, where everything having the Government of India tag just went wild. So I believe you need to look for this niche space and look for your stock. Coming to IT, I believe we are not at the bottom, but we seem to be forming a, a bottom. Some sort of confirmation from the mid-tier IT companies will give comfort as to where we are. But let us see, there is a stark difference in the results reported by TCS and Infosys. So as far as leadership is concerned, I believe Infosys is much more behind in the race. TCS is now far ahead. There used to be a time when Infosys was considered the market leader, but over the last few years, it's not so. I think you were talking about one more sector, banks, IT. Let's talk about maybe consumers. I believe there could be some opportunities there because one of the party manifestos talks about freebies, and freebies also include products which come in the consumer sector.
Right. Arunji, we are fortunate to have you on a day when the dance of democracy has also begun across India. How do you see these elections panning out? There was a distinct view in the market that this sharp run-up that we've seen till almost 75,000 on the Sensex will take a pause irrespective of the outcome of the election. It seems to have started earlier. How do you see this election impact on markets?
So if your question is how do the markets view this election, as far as the markets are concerned, they have already given their verdict. It's in favor of the party which is currently at the helm of affairs, who would be completing in the next 1.5 months 2 terms, and they would get a 3rd term. What remains of significant interest is how many and how much, if at all, there is any number that is still a question mark. It doesn't make much difference whether the number is X, X plus Y, Y, Z, etc., etc. As long as it's way past 273, the market is comfortable because you would have stability for yet another 5 years. So that's as far as the market and the elections is concerned. Of course, with the help of friends in the media who make it a big, nice event, there is a lot of expectation, there is a lot of euphoria that happens with such events, and you get carried away with the excitement that comes with results being declared, because there are always some hits and some misses.
Okay. My last question to you, Arunji, is the structural bull market in India still in place? Of course, we don't know what the problems in the West Asian part of the world might boil out into, but given the strength of inflows that come in via SIPs, the way dips are being purchased, do you think that the structural bull market is in place?
You have asked a very, very loaded question, Shail, and you very nicely put it. This is the last question, so it needs a lot of thought to be put in before I answer this question. Couple of things we need to understand. Domestic flows from retail investors are at new highs. We've never seen such kind of money coming in. What it has done to the markets is it is able to bear and compete with the onslaught that happens in markets when FIIs are continuously selling. We are able to protect our home market. On the flip side, we must understand that without FII money coming in on a sustained basis, markets can go only that far and not much further. So that money flow is also important to our market. When would that come? When India becomes a favored destination. It has to happen on 2 different grounds. One, India is attractive, it offers value for investors. B, other competing countries are not offering value. I believe the second would happen in the shorter run, because the one market which is doing well or has been doing well, the US market, seem to be having problems of their own with the economy in fine fettle, but inflation going through the roof. This new geopolitical tension and the way it could pan out, your guess is being as good as mine, could lead to inflation continuing to spiral and all hopes of rate cut in the immediate future being dashed. I hope I have answered what you were looking for.
Okay, Mr. Kejriwal, many thanks for your time and speaking to us on Business Today Television. Truly appreciate your time with us. Mahesh, coming to you, how would you really expect elections to really impact now markets over the next 45 days odd? Are you looking at particular themes like how Mr. Kejriwal was also pointing out, is a theme like affordable housing, maybe tourism, hotels, all of this also on your radar, something which has been talked about a lot in the manifestos?
Oh, absolutely. But outside the manifestos, actually, I think let's look at the structural themes that will play out over the next 5 years as far as India is concerned. And as I pointed out, I think FIs, FPIs, FDIs will have to come to India in a significant manner based on what we are doing. So I think the structural themes are renewables, which the government is putting a huge amount of capex through. 500 gigawatts in terms of renewable capacity expected over the next 7 to 8 years. The second element, obviously, is electrification and the entire infrastructure thereof. We've been hearing of Elon Musk visiting India, setting up a manufacturing base here, so on and so forth. If that turns out to be a reality, I think a lot of the auto ang companies, as an example, which have already started getting into the EV components part and the EV ecosystem in general, should start delivering better set of numbers, not just for the domestic ecosystem, for the global ecosystem as well. Consumption discretionary patterns are going to go up significantly higher. And therefore, as you point out, in terms of our purchasing parity, from $2,000 as we come down to that figure of $3,500 over the next few years, you've seen what that has happened when a lot of economies were at $2,000, whether it's China, whether it was the UK or other economies as well. The next 10 years have been explosive as far as spending patterns are concerned, and therefore corporate earnings as well. Capital goods, capital infrastructure, and manufacturing as a base for India is going to be a huge super theme, and within that, I think we're probably going to get a lot of sub themes that play out. So I think the India growth story continues, in my opinion, such you'll get all these different players, housing finance companies, real estate as a space, right? 6 year cycle. The first 3 years belong to the developers. The next few years, the next couple of years will belong to the ancillary companies. They have not done that well. To pick out any stock within the ancillary space, there had been input cost inflation and demand was not that great. But as new houses come through, as refurbishment starts happening, the ancillary stocks come into play in the mid cycle of that real estate cycle as well. So I think the next 2 years, ancillary stocks like plywood companies, laminate companies should start performing very, very well. So there is this entire ecosystem that can be played out and stocks to be selected within these spaces. Continue to remain extremely, extremely bullish on India and India's growth story over the next 10 years.
Let's get Osho into the conversation. Osho, would you look at defense stocks? This was one sector that I was extremely hopeful will react positively to the pain that is there in the Middle East. It has. Strong gains seen on HAL, BDL, Cochin Shipyard in particular. Anything that catches your fancy?
See, overall, as you have mentioned, the defense counter are performing pretty well, and it was expected that from here onwards, defense counters have seen a very significant positive technical developments. So I was expecting BDL to have a very strong movement from here onwards, because looking at the daily time frame chart, it has seen a consolidation breakout in the last two sessions. Yesterday, it has seen some kind of cool off or profit booking from the higher end, but that has given us the opportunity to re-enter into the counter. And again, today I'm expecting 1800 should be acting as a very strong support zone for intraday or maybe for 1 to 2 days kind of a time frame perspective. So I'm expecting that from here onwards, a strong follow up can be seen in BDL. On the high end, I am expecting a target of nearly 1890 to 1900 on immediate basis. And overall, the theme of defense is looking very positive. HAL is at its lifetime high, so I'm expecting that the follow up buying should be continued in HAL also, and many counters like BEL is also looking very positive to me. But BDL specifically, because it has seen a consolidation breakout, and I'm expecting the rally to still have some kind of potent 50 to 60 kind of a upside movement in a very short term time frame.
Right. Mayuresh, before we bid you goodbye, your view on the power sector. In the first 15 days of April, power consumption has hit a peak of 70 billion units, up 11% over the same period a year ago. How are you looking at power stocks, whether they are producers, whether they are auto ancillaries working behind the power sector? What looks good?
Space looks very interesting. And again, I think that entire renewable theme works wonderfully well for this sector, Shell sir. What you probably just mentioned, the expectations in terms of power demand to GDP, I think that correlation coefficient will move from zero point 0.9 to 1.1, 1.2, which basically means that over the next few years, consumption demand is going to move up significantly higher. So I think power distributors, transmitters, and the entire ecosystem in terms of the EPC players should continue doing well. Tata Power is an example, right? The expectation in terms of solid earnings story is still expected to continue. So I think this is one stock that can be kept on the radar from a developer space as well, or from a producer space as well. Within the broader theme of power, I think APAR Industries is something that we continue to like. I think renewables is going to be a huge theme. The stock has moved up, but our own sense is that it has hardly done anything as far as the entire renewable ecosystem is concerned. So to that extent, I think the extraction that is required in terms of renewables, the power thereof, the laying of renewable lines, uh, not just domestically, globally as well, because there is going to be huge demand expected to come out of that. Or even a stock like a power mech projects as an example, which is getting big time into power, non-power spaces as well. There is this entire theme, shelter of desulfurization. So I think FGD, as it is called, flue gas desulfurization. March 26 is where the deadline will probably end. There is a 1 lakh crore kind of opportunity that the market is probably sensing. Very few players that make equipment for that space. 5,000 crores orders just about being met. So around 90,000 odd crores still to be done over the next 18 months. So you can imagine the kind of orders that can come through and the maintenance thereof that can come after that stage as well. So a lot of sub themes to be played within that. But Tata Power, Apar, Power make a few stocks within this space.
Mayuresh, just one last question on Geo Financials, because today the earnings will be coming out. How are you really looking at the stock and the company now going forward from here?
They've done exceptionally well so far, Sakshi. I think they've got a very strong team at the helm. So from a strategic think tank point of view, I think they've got the best people out there to probably ensure that they pluck out everything that is there as far as the low-hanging fruits are concerned. Getting into good tie-ups in terms of asset management, life insurance, they've got an existing database that is already existing through Geo, which will help them from a technical perspective and a tech support perspective as well to cross-sell. It has done exceptionally well. No numbers per se at this juncture, and therefore very difficult call to take. But yes, I think it's a structural bet that probably happens. So anybody holding on can hold on.
Okay, well, many thanks, Mayuresh, for speaking to us and sparing all that time with us. Always a pleasure to host you on Business Today Television. And hope you have a fantastic weekend ahead till we get you back next week. Many thanks for being with us. Osho, let us continue the discussion with you. It's the oil and gas space that continues to be in the thick of action, with the Brent crude climbing above $90 a barrel. Of course, the upstream makers, ONGC, Oil India, are the ones that are taking it away. But and pressure on the OMC majors as of now, about 2.5% of a dip coming in on this. How are you? But the gas space stocks are again inching higher. So Indraprastha Gases, for example, up and about in the F&O space. The entire space, how would you really look at, and where do you see opportunity?
See, overall, the entire space is looking very positive to me. Overall, on the technical fronts, also, all the counters have seen a decent up move, and there has been some kind of consolidation from the recent development. So, I'm expecting, as you have mentioned, ONGC, I am expecting it to reach the targets of nearly 295 to 300 in the coming period. But because overall, if we will be seeing the technical developments, it has been hovering above all its exponential moving average, and currently hovering above even its short-term moving average. So I'm expecting that trend to continue in the near period, and there can be a series of resistance. 285 should be acting as the first resistance, followed by 290 and 95. So these are the targets that I'm expecting on ONGC for the timing. And coming to gas companies, many counters are looking very positive. For example, Gujarat Gas was something which was in my radar. It has seen a very decent move from its 100-day exponential moving average. in the last three sessions, there has been some kind of corrections or cool off that can seen, but overall 530 is a very strong support zone, and I'm expecting until it is sustaining above 530 odd levels, dips should be auguring well for the buyers. And on the higher end, 565 to 570 is the resistance zone. The time it breaches the zone of 565, from there onwards, we can see a very decent up move towards the zone of 600 from a positional point of view.
Okay, ladies and gentlemen, the markets have taken a very, very interesting turn after, how should I say, consolidating the 21,800 in their favor. The bulls have taken another step. 850 is with the bulls. At the moment, the index is 21,875, down just 122 points as far as the Nifty is concerned. Remember, the low was 21,760. So something like 110 points have been recovered. Now, this could be a combination of short covering. It could also be fresh buying into index heavyweights. The situation on the bank Nifty is even better. The index is now down just 155 points at 46,900. Remember, the day's low was 46,600. So a swing of 300 points in the positive direction has happened for the bank Nifty. The pain persists on the IT index. Even the broader markets now are improving. I'd like to point out some stocks that have hit intraday highs, and within them, let's look at stocks which are at the moment at all-time highs. There is NAM India, the wealth management company, the company that runs a lot of ETFs that we often talk about, Nippon India PSU ETF, Nippon India CPSE ETF. The parent company, NAM India, now 1.7% higher at an all-time high of 562. Pump maker KSB, 45.38, a percent higher. And a company that we've often talked about on Market Today, Lloyd's Metal, is also at 711, making a fresh high as far as prices are concerned. Volume buzzers, we are now at 952. While this is not exactly a day to look at good volumes in terms of price gains, but still I'll put your attention to Timken India. They make bearings for automobiles as also railways. 40% of their revenue comes from railways. The counter is up 4.2%, 3170, and about 1.2 times its 5-day average has already been traded at 89,000 shares. ICICI Post Securities and post earnings, ICICI Securities is up almost a percent. One-time volume is already traded 604,000 shares. There's no stopping in the stars. The response that is coming from for Vodafone Idea's FPO is adding luster to Indus Stars. I think this should be a fresh 52-week high, 3% higher, 355. 50% of volume has already been traded in the first half an hour of trades. There are stocks like Avanti Feeds, there are stocks like HSCL are also up in the green. Most active and top gainers on NSE 500 are Cochin Shipyard, 2% higher, 1107. Exide Industries, 2% higher, 458. ONGC, 1.7% higher, 278. We have Apollo Hospitals, 1.3% higher, 6142. Any upper circuits? Let me just check if there is one. Again, it's Hind Rectifiers. This is a railway themed company. It was up 10% yesterday. It's up 10% again today at 737. I will not be taking a technical view on it, but the markets seem to have taken the problems in the West Asian part of the world in their stride. It's a very, very sensible, a very matured understanding of where India is at this point of time in its journey on the economic side. The Nifty for you, ladies and gentlemen, 21,862. If there are no further flare-ups in the Middle East, I would imagine that we've seen the worst. Let's hope it's that way. Sakshi.
Right. Osho, how would you really look at Exide? There is no let-up in the kind of rally that we have seen here. Again, on a day like today also, the stock is up and about 0.5% and 1% in the F&O space. How would you look at Exide now?
See, this counter has already rallied almost 50% in this current month. And technically, it has entered into an overbought territory. So from here onwards, the risk reward is definitely not favorable. But yes, the momentum still persists in the counter, and one should try to ride the momentum till it sustains on the higher levels, but should definitely trail their profits, keeping a stop losses on the higher end. For now, 438 should be acting as the support zone. So one should definitely keep their stop losses around 438, because as I have mentioned that overbought, it is at a overbought territory. So in the recent period, there can be some kind of correction that can be seen. So that should be considered healthy only, because after 50% of movement, there can be approximately 20 to 30% kind of a move on the downside also. So one should definitely try to gauge their momentum, book their profits, wait for some kind of consolidation near the zone of 400. Once it sustains and consolidates near the zone of 400, then again we can look for re-entry in the same counter.
Okay, got that. How about Apollo Hospitals? What do you sense here? And it's coming back after consolidating a bit and it's seeing some momentum build again. Is this a stock to track for the short to medium term?
See, overall, Apollo Hospital is hovering in a very narrow range. On the lower end, 100-day exponential moving average is the support zone. On the higher end, 20-day exponential moving average is the resistance zone. So yesterday, I was having a bearish view in the counter approximately around the zone of the time it breaches the zone of 62.60 on spot levels. And today, around the zone, because as I have mentioned, that 100 EMA should be acting as the support zone, so which is approximately 62.50, 62.60 odd levels. So from here onwards, I'm expecting that there can be a decent up move that one can expect on the higher end. So on again, there can be a range bound movement of 200 odd points from 6,050 to 6,300 on the higher end. Until it gives a very decisive breakthrough beyond these ranges, then until that time, one should try to buy on the dips and sell on the rises.
Okay. The other stock that I wanted your attention on is ITC. That's ticking higher. 0.9% uptick can be seen on this one again. Is this a stock that you would like to track for technical trades?
See, overall, the whole counter is into a very strong consolidation phase. So overall, I am expecting that there can be some initial momentum that can be seen in this counter, but I am expecting it will gain strong traction only when it surpasses the zone of 200-day SMA, which lies around the zone of 435. So until that time, there can be some kind of momentum or volatility that can be seen in this counter, but I will be very much comfortable once it surpasses the zone of 435 on a decisive manner.
Okay, ladies and gentlemen, 9:57 as far as markets are concerned. It's been a very, very exciting day, full of a lot of volatility and a hope, as I would put it, as far as the future of Indian markets are concerned. There was panic all around, and there is still panic all around in Asia and as far as Dow futures are concerned. But we seem to have negotiated this problem in the Middle East with a lot of maturity and a lot of foresight. While there is pain in Asia, the Nikkei futures are still down 540 points. They were down about 1100 points a little earlier. Dow futures were down 300, 400 points. They are now down just 266 points. And there is a similar sensible view that is coming into Indian markets. In fact, if you now see the advanced decline ratio on a lot of indices, they have improved dramatically. And needless to add, a lot of stocks have recovered very sharply from intraday lows. While all 19 indices continue to be in the red, there is some sanity coming into the NSE 500. At the moment, the advanced decline ratio on the NSE 500 is 61:440. This was much worse in earlier trade. Overall, 300 stocks are in the green on the National Stock Exchange compared with 1675 that are in the red. We hope that during the day, if there are no further escalations, this data will improve. There are lots of moves coming into the auto ancillary and the ancillary space. Escorts is at a day high, 1.8% higher at 3073. Strong moves coming into Hindustan Unilever, 0.5% higher, 2225. Vedanta, there's no let up happening, 394.50, 1.5% higher. These are the stocks, ladies and gentlemen, that are at days high, including HDFC Bank, now in the green, 7 rupees higher, 1541. We leave you with the Nifty 21,877, down just 119 points. The Nifty Bank 200 points lower, 46,850. Sakshi.
Osho, many thanks for being with us on this very special edition, and viewers, we will wrap it up at that, the first and the opening edition on our channel. Recovery happening on the street for sure, 21,876 from the low point. So this is a positive indication. We will continue to track how the markets move forward from here, and for that you should stay with us on Business Today TV. Don't forget to like and subscribe to our channel, and we will continue to get you fantastic conversations around elections, around geopolitical tensions, how do you navigate your moves in the markets along with it, and everything that you need to know about strategies on the street. Thank you so much for tuning in for now. Where Gautam Adani is going to be putting in big money. Well, reports suggest that Gautam Adani is now looking to invest over $5 billion in the next